Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's May 16th, 2023. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, then go down below into the description area. Make sure you're signed up for our email distribution list so that way you can be notified whenever we post these videos. We'll also let you know which stocks are giving you overbought and oversold cluster signals in the S&P 500. I imagine we're going to see quite a few oversold ones in tonight's email. In addition to that, we're heavy users of Twitter. If you're not doing so already, I would encourage you to follow me. My handle is @BrandonVanZ, and we really appreciate those of you that click like and retweet on these Market Outlook related posts. And then last but not least, we do have a presence on Facebook. Feel free to join our group at that web address you see in the logo in front of you. All right, let's go ahead and jump into today's trade activity. And as you can see, we have our S&P 500 heat map pulled up here in front of us, and it doesn't look too appetizing, at least if you're a bull. This is probably quite delicious if you're a bear, I suppose, but you can see it was very, very red/maroon type of a day, which equates to a fairly heavy amount of selling. Now, what's a little odd about it is that if you just looked at the end result of the S&P 500, we were only down about 0.7%, not even a whole percent. So this is kind of interesting, and one of those days that we've seen a handful of times recently where, you know, this market continues to be carried by just a handful of mega cap names. And as you stare at this screen in front of you, you will probably see that Google/Alphabet was a nice performer today with both its C class and its A class here up about 2.5%, just above that. So that was a pretty solid day. Google's been on a tremendous run here recently. Microsoft is one of their key competitors in artificial intelligence. It was also up today, 0.74%. NVIDIA was out there hitting some new highs, at least multi-month yearly highs, not all time, but still a very nice day on an intraday basis. They still ended up closing higher by 0.9%. Apple was exactly flat on the day, so it did not have a positive or negative impact when it was all said and done. We do see that Tesla was up just a hair at the end of the session. It's actually trading up after hours as they are having an investor event, and David Faber over at CNBC is interviewing him right now, as a matter of fact, when I'm recording this. So it might very well end up in the green first thing tomorrow morning based upon what we're seeing so far. Not a huge move after hours, by the way, only up by about $2, but still at least having some positive momentum there. We also saw another big company, Eli Lilly, up about 0.5%. That stock has been a home run in the mega cap pharmaceutical space as a $414 billion company these days. And then Berkshire Hathaway was also up just a hair. It was up 0.07%. But the point that I'm trying to make is when you look at the biggest squares and rectangles on the board, most of them were green or at least flat. Then when we turn our attention to everything else, the vast majority of the rest of the market was down, 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 and some pretty big movers along the way. You can see that nearly all energy stocks, in fact, it probably was all energy stocks if I zoom in. I don't know why Thinkorswim continues to have these things horsed up with the sectors and the industries, so just disregard the Berkshire Hathaway sitting in here when I zoom into the energy area. But this stuff to the left of Berkshire Hathaway are the actual energy stocks in the S&P 500, and you can see that they were all down here today. So it was quite an ugly day there. For the oil companies, it looks like all of the utility stocks were also down today. Yep, that is confirmed. Every single one of these in the red. So a very ugly day there out of the utilities. You didn't see much love out of the materials. We actually concentrated on the materials today in my dividend growth investing class, where we're looking for opportunities where falling stock prices equate to higher yields as long as we can trust those yields. So feel free to check out the recording of that DGI class if you are a premium member of Market Scholars. You'll also see that the financials struggled once again today. They were actually doing quite nicely yesterday, and a rare rebound day for the regional banks, but they were right back in the hole today. We did have one green patch show up there, and that was Capital One. Send your thank you letters to Farnham Street in Omaha, of course, the headquarters of Berkshire Hathaway and Warren Buffett. But last night, when the 13 Fs were revealed of the big fund managers and hedge funds and things like that, it was revealed that Berkshire Hathaway did take a position in Capital One, so it managed to avoid the damage that happened to basically every single other stock in the sector, and it managed to close higher by 2% here today. So, it was kind of just random stories. Some of the home builders did okay today. So notice that DR Horton was up 1.82%. Lennar was up a little bit. Pulte was up a little bit. So you had a little bit of a niche working there within consumer discretionary. By the way, Home Depot reported their earnings this morning. That was one of the bigger stories of the day. It did end up closing lower by 2%. Those of you that follow me on Twitter might have seen my post first thing this morning when Home Depot hit a 3% dividend yield within the first 5 minutes or so of trading. And as I mentioned on Twitter, it was the first time since COVID that Home Depot had a 3% yield. In other words, back to 2020 was the last time we saw a 3% yield. Now, Home Depot did end up rallying a bit on an intraday basis, so it didn't close with a 3% yield. Nonetheless, it did touch it in the morning session there. So keep your eyes on that one. Obviously, a well-regarded dividend growth company, but like so many companies, is quite out of favor. In fact, one of the things that I was sharing on Twitter here just a moment ago was that 45% of the 668 stocks I cover on the Market Scholars Dividend stair-step charts closed in the blue undervalued zone today. That's the highest percentage of the past year, with the S&P 500 well above its October lows still. It confirms that DGI stocks are lagging, because otherwise you would assume that the highest percentage of stocks with attractive yields would happen when the stock market is at a low. But that is not happening right now. And part of the reason is due to this other tweet that I posted here this afternoon directly above it, where I said that the only major segment of the market that's above its 30-day moving average is growth, which can be pulled up using ticker symbol SPYG. Most everything else is struggling and gives you the impression that there's rot under the surface despite the relative calmness portrayed by the SPY or SPX due to mega cap tech strength. Now, if I zoom in so you can see this a little bit better, you'll kind of see what I mean here. SPYG is this chart with the dark green up towards the top, and it's above its rising 30-day moving average. Every single one of these other charts has price below its moving average at this moment in time. And just to kind of emphasize what I was mentioning a moment ago about dividend yielding companies, notice that the dividend yield category here, ticker symbol SPY-D as in dog or David or dividend, I suppose, notice that it is getting close to breaching its multi-month lows. The dividend growth stocks through the form of the dividend aristocrats are holding up a little bit better, but even they are breaking below their moving average right now. So this has been a time where a number of dividend stocks have really fallen apart, and now their yields are higher than they typically are. Nearly half of the stocks I cover would be in that kind of more attractive zone, and that is very rare. Normally, you kind of have your traditional bell curve of 25% undervalued, 25% overvalued, and then the 50% in the middle that's just kind of neutrally valued. So right now it's definitely tilting towards the more attractive undervalued zone because of the heavy selling that's taken place in a number of those securities. While we're over here, just a quick heads up, you'll see that the last time I did the Market Outlook video, only 89 people clicked like. So that's why this video will end in just a 15-minute variety here today, as promised. If we're under 100 likes, then I'll keep it nice and sweet and short for you guys. For those of you that prefer the longer form, hour-long types of videos, make sure you get in the habit of clicking like for us there. And that will help send the message that you want us to continue to these videos in the current format. So this, I believe, is the first time in over a year where I had 2 videos in a row under 100 likes. So it is not normal, but but it could be a slippery slope. Maybe this is a sign of things to come. So for those of you that enjoy the longer format videos, if you haven't been clicking like in the last couple of sessions, make sure you get back into that habit, because we needed 11 more of you to get up there. So thank you to those of you, by the way, who do consistently do that every day. Anyway, let's get back over here to our Thinkorswim platform. And now that we got a lay of the land there from a heat map perspective, let's take a look at the specific numbers. And you can see here that 58 out of 500 companies in the SPX closed higher today. So that was only 12%. In other words, 88% of the stocks closed lower today. Yet when you look at the end result of the session, the S&P 500 was only down 0.64% today. So again, it's the same theme that we've been dealing with. We have about 7 companies that are doing quite well, and they are masking the weakness of almost the entire rest of the market at this moment in time. It is quite extraordinary. You look at this chart of the S&P 500 and everything seems fine. I mean, yes, it did cross below its moving average today, so there is a bit of stress there, but it looks more like a sideways chart. Then when you start digging underneath the hood, you'll find that rot that I had mentioned on Twitter, where there are a number of stocks that are really falling by the wayside right now. So as it stands here currently, you'll notice that the S&P 500 is trading below its falling 30-day moving average. That's what that red moving average is telling us. And the pink background color is telling us that we have a weekly bearish posture according to the intermediate line on the market forecast for the S&P 500 right now. So it wasn't a day of big damage, so to speak, but it is putting stress in the chart nonetheless. In terms of the Dow Jones Industrial Average, it had a little bit of a worse day, partly due because of what I mentioned before with Home Depot being a key component within the Dow 30 index. It was down 1.01% here today. You can see what that looks like on the chart. Similar to the S&P 500, you have price below a falling moving average right now, and you actually have a darker shade of pink telling us that we don't just have a weekly bearish posture, we have a strongly bearish posture using that intermediate line there on the market forecast. Down below here, off to the left in the lower rung, you will see that the NASDAQ composite actually touched a multi-month high here today on an intraday basis, but did end up closing just a hair under break even. It closed lower by 0.18%, so by far and away that was the leader today, at least on a relative basis. And you'll see that this chart has been our leader. This is not a surprise. It has been the case for quite some time, and it continues to be the case. Notice that the NASDAQ is the only one of these 4 U.S. equity indices that is trading above its rising 30-day moving average with that green moving average there. And the green background color is telling us that it's also the only major U.S. equity index that still has a strongly bullish intermediate posture with that green line on the market forecast in the upper reversal zone at the moment. And then towards the right of that, you see the Russell 2000. I mentioned that yesterday it did pretty well because all of a sudden we had a little bit of a pop out of the regional banks, but here we go again, rolled over one day later, and the Russell 2000 was down 1.44% here today. We're back to not only trading below the 30-day moving average, but also strongly bearish posture with that green line rolling over underneath the chart's 50th percentile right there. So the Russell 2000 is the one that is the most likely to breach its multi-month lows first. So we'll keep our eye on that. And if it happens, we'll be the first to report it to you here during these videos. Real quick before we wrap up here, let's take a look at our 3 green arrows status. And as we pull this up here, notice that we have 2 of our charts with 3 red arrows, and that would be the S&P 500 and the Dow Jones Industrial Average up there at the top. We do still have the NASDAQ composite with a 3 green arrows status, and then the Russell 2000 has a mix of green and red arrows. And then let's take a quick little peek here also at the 1040 crossover method. And you can see that despite some wear and tear in the short term, 3 out of our 4 charts still have the golden crosses. The only one with the death cross is the Russell 2000. So that wraps us up. Our 15 minutes are up. If you prefer the longer videos, make sure you get out there and click like. If we're up and over 100 likes, I'll be sure to give you an hour-long video on Thursday. On the other hand, if you like these shorter length videos, then don't click like. And if we're under 100 likes, then we'll continue to do these types of videos with just the quick 15 minutes. So we'll let you guys decide there, but regardless of what it is that you decide on your own, I appreciate you checking out this video tonight, and I'll see y'all very soon. Take care, everybody. Bye-bye.